any people trying to make short-term trades are going to be exposed to dramatic volatility in these small windows of opportunity. Needless to say that it would have been a very difficult period of time as a trader if you look at that chart there. But there's no real narratives that are propelling the cryptocurrency market at this exact moment right now, perhaps apart from meme coins and perhaps liquid staking to an extent. So these large macro events are still going to have numerous traders diving at any opportunity to try and make a gain, try to at least.
Yeah, Jake, is it even possible to trade the Fed meeting, especially this time around?
Personally, our clients are not trading on a short-term basis like this. I can't speak on behalf of every crypto investor. I'd suggest numerous people are trying to make a quick buck here. But we've seen this month and month again. Every time there's a major macro news, there's volatility across all markets. Bitcoin is no different to that. It goes up, it goes down, it goes sideways. And I'm sure for every person who makes a gain, there's numerous people who took a loss there. So not something that I'm looking to touch myself.
Right. So Jesse, you talked a little bit about how the Fed will be driven by data rather than a predetermined decision to raise rates. Why is the Fed doing this? And genuinely, why weren't they already doing this before?
To be fair to Chairman Powell and the policymakers of the Fed, they've been saying that they've been data driven for a long time. As we're all very much aware, it takes a long time, those long and variable lags for the full effect of interest rates to be felt on the economy. But because the economy was still so strong and the metrics they really care about, like wage growth, were still so strong, they didn't really feel that compelled to slow down their shift. And now that we're seeing some softening in the data, it would give them the data that they needed to see to feel comfortable at least shifting towards a pause here.
Right. Okay. So I know this is about monetary policy, but I'm going to ask about fiscal policy because I have the mic here and I can ask whatever questions I want. Jay Powell was asked about the debt ceiling, and he said that it was essential that the debt ceiling be raised. What could, and I want to ask both of you this question, what could this possibly mean for the broader economy, Jesse, and then crypto, Jake? So Jesse, answer that question, then Jake right after.
That's a very tough question. I think the fact that it's so uncertain and the ramifications could be so broad is exactly why Chairman Powell would really prefer to not see that happen. I think it's really uncertain exactly what would happen if the U.S. government defaulted on its debt, potentially throwing a wrench into the largest market, one of the largest markets out there. Let's just hope that people can come together in D.C. and avoid that outcome.
Sure. Jake, anything to add there?
Yeah, I think I'd add to that in the 3 weeks since the Silicon Valley Bank collapse, we've seen regional banks plummet by more or less around the 10% mark, but we've seen Bitcoin at its current prices up around the 18% mark. It's quite chaotic to say the least, and I'm sure a lot of traditional investors listening wouldn't have thought that regional banks would be outperformed by the price of Bitcoin in that 3-week window to the extent that they have. With that being said, I think anyone who's working in this field or anyone who has their finger on the pulse is fearful. This is uncharted waters to a large extent, and there's numerous people in the largest economy in the world who are going to be affected by all of this. As a result of that, it looks like we're all kind of still sitting on our hands waiting for the next move, but at least markets are being a little bit more predictable in the short term, but we'll see how the rest of it goes.
Yeah, Jake, I'm glad you brought up these regional banks because that also came up during the Fed meeting, part of the Q of A, about this consolidation of banks. And Powell said that it is healthy to have a range of different types of banks, right? Is this banking crisis over? And you say that there isn't really a narrative driving crypto right now, but wouldn't the failure of regional banks be a good narrative for, say, Bitcoin, a way to opt out to know that your money is there?
Oh, absolutely. We also need to look back at the fundamentals of Bitcoin. This is something that was born off the tragedy of the 2007-2008 financial crisis. It's embedded in the foundation of what Bitcoin is. And we're seeing the past repeat itself to a large extent, but worse this time. So with that in mind, the narrative for Bitcoin over the past month, post Silicon Valley Bank, and also largely over the course of the year so far, has been on the basis of people are looking to flock towards a safe haven. Is Bitcoin that safe haven for the long term? Well, that's still anyone's guess. I obviously have my biases, but I also have my conviction. And what we're seeing currently is a narrative towards Bitcoin, but it does appear that the movements today and the announcements today have not been enough to really drive that either way.
Yeah, Jesse, do you think that this banking crisis is over, or have we just seen the beginning of it?
Chairman Powell said, very adamantly in his statement that sector, the banking sector and regional banks in particular, are, stable, everything's fine, the backstop worked. Or I would point out that if you look at banking stocks for those, smaller to medium-sized banks, they haven't really recovered since that huge drop we saw in March, which would, certainly raise some questions about, what's going on there. And you talk about the potential flock towards safe haven assets for depositors. A lot of those small depositors who are depositors at those smaller banks are not moving back. They moved over to your JP Morgan Chase or otherwise, or directly towards U.S. Treasuries.
Yeah, so I know we're not supposed to trade right away. We're supposed to wait for the dust to settle. But as the dust is settling, I want you to just tell me what you're looking for the next couple of days. So Jesse, go ahead first, and then Jake, and then we can wrap up.
I'll be watching, continue to watch the market for U.S. Treasuries, both, those nearer term Treasuries and especially the 2-year Treasuries to see, how the market digests this. We've seen this real disconnect between the market's expectations for interest rates and what the Fed's maintaining. So while they've shifted to a pause, they're still maintaining that the Fed will keep interest rates elevated through the end of the year, and the market doesn't really believe that, and hasn't for some time. So it'll be interesting to see, how that gap between the Fed and markets is narrowed and which way that goes.
Yeah, Jake, what about you?
I think to take a different approach on my end, what I'm looking for is more so the consumer relationship between retail investors and Bitcoin. Data such as how many Bitcoin wallets have got more than one Bitcoin within them. Some data sets like that, the real simple basic indicators of how much Bitcoin is being adopted is what I'm really looking for. And to me and our company, that will really establish the narrative of, is Bitcoin being seen as a source of a stance to which people can keep wealth as a safe haven, or is it simply being seen as a speculative asset that gets traded just like everything else? So that decoupling event from traditional markets, I think, is going to be something that I'll be looking out for with a keen eye.
Yeah, I think that makes a lot of sense. I'm looking forward to the jobs report to see if there are too many jobs in the economy, and hopefully that doesn't stress out the Fed too much. Anyway, guys, thank you for your time. That was Jake Boyle and Jesse Wheeler. Coming up, the White House is proposing a punitive tax on crypto mining operations. So we have a major Bitcoin miner joining us to discuss. Coming up next.
Welcome to CoinDesk TV, your 24/7 news source in the Bitcoin, blockchain, and digital asset space.
People use digital assets for hundreds of reasons.
Every single asset in the world is going to be digital.
I feel like Gen Z could really take this space and run with it.
What's going on here, guys? What are we doing?
We're breaking this news on your channel.
There is so much interest in getting into crypto right now.
I don't foresee any glass ceiling anytime soon with this.
Here's our CoinDesk Bitcoin News Roundup.
It's great for the world. It's very bad for Bitcoin.
This is amazing. I want one of these. I don't know, there's only 250 of them.
Tune in 24/7 to CoinDesk TV.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
Data from Dune Analytics reveals the number of NFTs tied to the Bitcoin blockchain jumped above 3 million earlier this week. This comes after a one-day spike in activity that mainly consisted of text-based assets. The tokens are called inscriptions and function on the Ordinals protocol, which allows users to embed data into the Bitcoin blockchain by inscribing references to digital art into small Bitcoin-based transactions. The surge follows the introduction of the Bitcoin request for comment token standard, stealing from the ERC-20 standard, allowing users to issue transferable tokens directly through the network. Now, let's talk about some mining. The Biden administration is looking to impose a punitive tax on crypto mining operations for the, quote, harms they impose on society, according to an online post from the White House Council of Economic Advisors. Joining us now to discuss that is Marathon Digital Holdings CEO Fred Thiel. Welcome, Fred.
Thank you. Good to be here.
Good to have you. So, the administration's blog entry made the case for a U.S. tax equal to 30% of a mining firm's energy costs. What's your reaction to that proposal?
Gosh, we mostly don't have enough time for me to go over all the important points, but think of it this way: Bitcoin miners use less than a fraction of a percent of energy generated in the world. And the bulk of the energy we use is renewable. And what the White House is using here as a cover for this is, well, we want to make sure that we get to net zero. It's important for the climate. Well, there are a lot of things that use a lot more energy than 0.1%, right? And then the other thing to really think about is a lot of the renewable energy in the US today is starting to get backlogged because there's lack of interconnect. So, you have a wind farm or a solar farm, and you need to connect it to the grid so consumers can get access to the energy. There is a 2-year backlog on transmission today for renewable projects, which means if I invest $500 million to build a solar farm, I won't be able to get that online for minimally 2 years. And guess what? This backlog is growing every day. And by an estimate that Princeton University did, which was published in a Bloomberg article late last year, the U.S. needs to spend nearly $2 trillion by 2050 to build out the transmission grid if it has any hope of getting to net zero. Not alone think about the impact of EVs, electric vehicles, on the grid. EVs are not very clean when you think about it. Look at the batteries and what building those batteries and eventually, hopefully, recycling those batteries. There's a lot of damage that these alternative technologies could cause. And Bitcoin is this little tiny speck when you look at the energy consumption. So I think this is really just a camouflaged way of saying we want to get rid of Bitcoin, we want to get rid of crypto. The other thing is Bitcoin miners are the users of energy of last resort, meaning you put a 30% tax on energy, Bitcoin miners will likely move offshore, which is really most probably what the White House wants. They really just want to get rid of crypto in this country. And I think, this is very much like, go back to the early days of the internet. Oh my God, this is a bad thing. We don't want it. Luckily, sounder minds prevailed. And today, the U.S. is the leader in the internet. I think if you look at what's going on in Europe, the UK, you look at Switzerland, you look at Singapore, you look at Hong Kong, even Bermuda and the Bahamas now are putting very well-structured regulatory frameworks in place that embrace crypto and allow people to leverage it. And I think the U.S. is really losing out here. And again, we hope sounder minds prevail, but we're already focused on diversification. We're building one of the largest data centers in the Middle East and UAE together with our partners there. We're evaluating other options offshore. But realize that in the U.S., we sit predominantly behind the meter at renewable farms where there's either wind, predominantly wind in our case, and we act as an energy consumer when that generator can't sell the energy to the grid. So if they can't sell it to the grid, what are they going to do? Just lose money? And if they lose money, then they have to charge consumers more. So in reality, Bitcoin miners act as essentially a revenue stream, like an anchor tenant for a real estate mall developer that consumes energy when others can't and won't. And therefore, we provide revenue streams and profits to these developers of solar and wind farms so that they can operate successfully and not have to charge consumers high prices. One last thing I would mention is that, energy is priced negatively in this country, and this is a study that was done last year, 200 million times last year, 5-minute increments, energy was priced negatively, meaning there is too much energy, meaning they generated more than the grid could take. If that's the nature of the market, why are you going to apply an excise tax to miners? Again, it doesn't make logical sense, and I really think this is just a camouflaged attempt at getting rid of the industry.
Yeah, it's interesting you bring up offshoring, Fred, because in Texas even, there's a bill that's in the Senate, I believe, the Texas Senate, or has already passed the Texas Senate, that is trying to put a cap on demand response programs for crypto miners and Bitcoin miners specifically. Do you think that is something that will actually pass? Because to me, as someone who wants miners to stay in the United States as an American, it does seem a little bit nonsensical to say that demand response programs are bad when it's something that feels like it's good.
Yeah, the Charlie Munger famously said, look at who benefits from incentives, and you'll see kind of what people's agenda is here. So SB 1751, which is the proposed law you're talking about, essentially caps Bitcoin miners' potential participation in demand response programs at 10%. Well, the ERCOT grid loves Bitcoin miners because we can shed our load up to 99% of our load in 10 minutes, which is perfect for the grid response. And today there was an article published in one of the media outlets talking about, this summer there's an expectation that the Texas grid is going to use record amounts of energy. If you read a little bit further down, it says, oh, by the way, they have more than enough generation capacity, and the fact that they have large interruptible load, meaning Bitcoin miners, they can shed load whenever the grid is going to need it. And they don't expect, unless there are unforeseen generation problems, that there's going to be an issue with this. And that's thanks to this large interruptible load that we provide. So 1751 will likely not pass. I think the people really behind it are a combination of the people who really want to have battery storage technology for renewables and the other participants in demand response who can only shed 30% of their load. And Texas is a unique market. It's like an auction where ERCOT says, hey, I need you to shed load, and then whoever does it fastest gets it. And I think this is just a question of somebody wanting more of that money and trying to create a legal reason for Bitcoin miners not to be able to participate.
Okay, very briefly, Fred, I have one very quick question for you. Mining stocks, public mining stocks got hammered when Bitcoin got hammered, but to a worse degree. Do you think that going forward, that's going to stop where the Bitcoin mining stocks move more than Bitcoin itself does? Just very briefly, we have 30 seconds.
Yeah. So if you just look at today, for example, look at any day when Bitcoin moves, typically Bitcoin miners move 2 to 3 times as much, whether it's up or down. And I think you've seen year to date, Bitcoin miners have moved more than Bitcoin has. So that's a good indicator.
Sure. That sounds great. Fred, thanks for joining us. That's all the time we have today.
Thanks.
That was Marathon Digital Holdings CEO Fred Thiel. That's it for All About Bitcoin. I'm your host, George Kaludis. We'll do it all over again tomorrow at 3 p.m. Join us tomorrow morning at 9 a.m. for First Mover. You're watching CoinDesk TV.